Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, December 20th. Good to be with you guys this morning. Eman, Christopher's in the house, Mark, Peter, Pooja, Tom, Ziad. Great to see everyone in the room. So, dollar is right back at support, as you noted last night. Full round trip for that pull higher early in the month. That took us into 94.23. Sitting at support still right around 93.40, 93.36 level. We'll go over the DXY levels in just a moment. All the other pairs on today's menu: dollar yen, Kiwi dollar. By the way, I got stopped out of that dollar yen last night, so we'll go over that in a moment. Kiwi dollar, pound Aussie, and gold, which is testing that key resistance. We talked about this last week. With massive area of support down at 1240, and lo and behold, it did hold. You saw a little probe below, but the rebound now testing resistance. A look at euro dollar. I still think you could possibly get the stretch into 1868, 1882, but it looks a little tired here. Aussie yen with the breakout, still targeting 87.32 on that one. Euro Aussie, and then the setups from earlier in the week: the Aussie dollar, and pound Kiwi. Anything you didn't hear noted, or if you have any other specific questions or trade setups at any time, feel free to throw them on the message board, guys. Okay. Well, we're heading into the end of the year. Tomorrow's going to be our last intraday webinar for 2017, and still a lot of trades at major critical levels. Now, we always talk about how we're heading into the end of the month, end of the year now. Liquidity is going to be an issue, okay? And price action can sometimes do some pretty gnarly things. So just a quick note at the top of the webinar, again, that we're reducing our leverage on all our positions from here on out to the close, being a little bit more meticulous with your entries and stops. And just tread lightly. You know, it's not, we've had a great year. There's no point in getting too aggressive on anything right here. That said, here's what the DXY looks like. Okay, here's what we look like last night, and I'll show you what we look like today. The big thing that you have to keep in focus is this critical support that we're testing right here at 93.40, 93.36. First thing, weekly chart. You have basic slope support, the median line for the current operative formation that we've been following. Add to that on the weekly chart that we also have that 200 long-term week moving average. We're probing right below that right now, but you can see the critical nature of where we are trading. Obviously, we reversed right off of the low day reversal close from last year. Nice pivot in price. We got to get below this median line on a weekly close basis to get the conviction of the turnaround. So, weekly chart, view. All right, cool. Daily chart looks like this. Closer look at the daily chart also highlights that you're looking at some key support right at 93.36, the basic 50% retracement of the advance. Also note that you have the 100-day moving average right here in blue, right there as well, further highlighting 93.36, 93.40. Take it to the intraday charts as if that wasn't enough. Basic former swing low, nice pivot in price, saw acceleration, resistance, break, saw acceleration, support, and that further highlights this key area. So, probably wasn't a very good idea to get too, well, we weren't aggressive, but probably wasn't a good idea to kind of front run the dollar yen break, but looks like we could see some dollar softness here. Now, a downside break, the one caveat is you still have to contend with that 93 handle, specifically 93.09 into 93.06. That's the 2016 low day close, okay? And then we also have the 100% extension. So if this is corrective, you'd expect to see a bounce right there. We'll have to reassess it once we get there. But the focus right now is still right here at this 93.40 level. We're favoring the downside break, as I noted yesterday in the piece. But support is support until it gives out. So that's going to be the kind of thorn in our side today as we get into the U.S. trade session. We have to see this thing dip below 93.36. Questions on the index or where we stand here? And basically you look for resistance. If we do get a rebound here, you look at resistance, just that median, just that basic slope coming off the highs from last week. Be a first area you start to look. Obviously, key resistance still 94.14, 94.20, no change there. So that is the DXY. Here's what dollar yen looked like yesterday. I thought it was worth a shot. You know, we took a small stop on it, not a big deal, but 113.09 to 113.06 was such a perfect kiss. The second we came in here, I saw the reaction, pull back, we pushed again. I kind of just jumped into the trade with a quick stop just above. You know, it gave us a quick 15 pips, 16 pips. I think it stretched into 20 at one point. You know, I had a limit just right at the weekly open, didn't get down there, and then we stretched higher in overnight trade. Here's what dollar yen looks like, and here's the point of why we were looking for some resistance here. Well, I guess it's all about this chart right here. The downside break of the median line, the descending channel that we were working with, 1, 2, 3, sat there for a little bit before the break. Saw resistance to the weekly open. That level converged on the 618 retracement of this range and the broader 236 from the ascent. Not really stressing that, but it's also a swing high. So there was a lot there to offer a little opportunity to get back on the short side. Again, didn't give us enough juice for me to take even a piece of the trade off. The break back above did stop us out. And here we are testing again a break of that slope. You know, I don't want to get stubborn with this thing. This is dollar yen. There's a reason I call this the abomination, because it does stuff like this all the time. But I still wouldn't be surprised if it spikes into this and then still shows failure, right? You know, I don't necessarily have much conviction on this slope that I presented last night, guys. This line that you see here is the 618, okay, of that range. So while we didn't quite catch the lows there, it was a perfect confluence again on that 113.09, 113.6 region. And that held all the way into the start of Asia trade. And here's the break midday in Asia. So still looking higher for the immediate stretch. 113.33 is just a former swing high, nice pivot, but even higher. See if that median line does catch. Would I just look to short right off that region again? No, I'd still need to see some pretty convincing near-term turns and momentum before I try that short again. But yen is the weakest performer today, guys, versus the dollar. So probably not the best idea to try to push this again. We'll see what happens if we get up into 113.40, but that's the idea. Questions on dollar yen? Okay. So that is dollar yen number 2. Looking for an immediate stretch higher, but still looking for exhaustion on that stretch. Kiwi. Here's Kiwi dollar, and here's what we looked like last night in Kiwi. So this thing's doing some interesting stuff too. I was looking for the drop to get a little bit deeper near 69.45. Here's what Kiwi looks like. There's a whole host of reasons, again, that we were looking for a turn lower here. The region of which we reversed off of last week is pretty big. 70.38 to 38.2 retracement of the entire advance from 2015. You also have former slope support, now resistance there. It's the weekly chart. Daily chart stretches that region to 70.77, basic 38.2 decline. You have slope in that region again, okay? And even on the intraday trade, nice little slope there. You had a support at 69.78. Looking for a break there to open up that decline to 69.45. Now, I do think you get a bounce off of one of these two regions. 69.20 is the early open. 69.45 is just former swing highs, but also a median line of that same slope. So we were looking for a drop into here for a possible rebound, possibly around 69.20. You know, I don't think this shakes me out at all, guys, this reversal that we're making here today. Look for initial resistance, as we noted. It's still going to be right at the weekly open, 69.88. Or that's Friday's close, rather, excuse me. But I do still think this ultimately sees another drop lower before we turn higher. It's coming off a pretty big region. Really, really clean. So Kiwi is going to be an interesting one that we'll be tracking. I definitely, you know, was looking for that drop to get to 69.45 on this move. But the reversal, we'll have to see a hold here. For that scenario to sort of pan out. But if you had to be long the dollar versus something, I think this is something I'd be a little bit more comfortable with on the Kiwi short, just on account of where we're coming off of. Remember, an objective break, okay, aside from what anyone else says, just looking at this objectively, this is a pretty clear validation of a break of the monthly opening range. I mean, here's your December open. You set a low, you test a high, you test a low, you even test the high a third time before the subsequent break that you made on the 12th. Shifts the focus to a late month high in Kiwi. So we've been trying just to play the pullback at this point. Ultimately, I do think you still want to look for a stretch near 77 or 77, excuse me, just a bit higher. All right, questions on Kiwi. Be interested in a trigger at 69.45 or 69.20 on a pull lower. Okay, that's number 3. Kiwi dollar. Next up is Pound Aussie. So here's Pound Aussie. This one has been very interesting, although the range has been kind of stubborn, guys. I do think you're going to get the rebound eventually. I mean, here we are for the third day, kind of bobbling along that lower parallel. So just to bring your attention again for where we are in the broader scheme of things, here's Pound Aussie on the daily chart. Basic channel support coming off the lows. Converges right here on the November open. Nice support bounce there. Didn't even touch it there. We can see been riding this slope pretty steadily for the last 4 days. Now, to get constructive on a trade to actually be a long bias, we would need to clear 76 up to the upside above here. But for right now, this is where we're going to call home. This is the range of focus. As long as the slope support holds, you look at 75.60 into 76, excuse me, as sort of the key resistance zone that you'd need to pop through. Intraday chart looks pretty interesting. Well, first, I also just want to highlight the momentum signature. You can see here failure ahead of 40. So you're not necessarily invalidating the broader uptrend in momentum yet. But the near-term chart looks like this. Okay, there's that lower parallel. Boom. Opening range high for the week came right at that 38.2 retracement. 75, which was the first target we talked about. And we've been sitting in this range ever since. Keep in mind the weekly opening range here is astoundingly clear. Okay, here's your weekly open. So you have weekly open support and the weekly opening range low is at 74, 74.02. And then you have to the upside at 38.2 governing resistance. So very, very clear 100 pip range that we need to clear to get the validation for what the medium-term bias is. Gun to my head, shotgun approach, I still think you'd get a topside breach for a stretch into 76. That'd be a basic 38.2 retracement of the decline, testing channel resistance, and even up channel resistance. And that'd be sort of the first area of real test for the rebound in Pound Aussie. But we have to see this 100 pip range break. If it breaks to the downside, 73.47, it would just be a soft target. I really do think if that happens, you see a much more material break on account of what we saw in Pound Kiwi, right? That's another one we've been following this week, this month. And that actually broke that basic trendline support off the lows. So if we see failure here on the stretch higher, Pound Oz still might have some catch up to play. The focus right now is still on a push higher against this channel support, stretching to 76. All right. Now, obviously, we've been following the Aussie dollar trade, and I told you guys yesterday I got out of that long position. Do I regret it? Not really. We're kind of still trading in the same really tight range. If anything, the Aussie's still a buy and a pullback, I think. But if you do get that pullback, here's Pound Aussie ready to pounce on that and move that 76 handle. So things kind of are looking pretty clear at this point. We're just waiting for these near-term ranges to give out. Any questions on Pound Aussie? It's a range. Look for the 74, 75 range to give way. Ideal scenario, you get a break to the upside targeting 76 first and kind of reassess what happens there. All right, and no change to any of those levels on Pound Aussie. We're still holding this same range. All right, next up on tap is gold. And this is just one that we highlighted earlier, and I wanted really just to kind of bring to your attention that we're probing this key resistance level. So 1263 into 1267, we talked about it back here, you know, when we were showing that divergence into a trigger break, really nice reversal off of a major critical support in gold. And certainly the focus is on this resistance range. Here's the daily chart looks like. So we started talking about 1240 early on the decline into this region and how critical that is. You know, 618 extension off the high, 50% retracement of the entire advance from last year's low, slope, you name it, it was there. We were looking for the turn, kind of faked us out a little bit, took a while, but here's the stretch, and here's first major hurdle of resistance. 38.2 retracement of that range from last year's low, the 200-day moving average, and the 618 just to the near-term advance from the July lows, all right here. So is it worth taking a short? I don't think so, but if you're looking, or if you've been on the long side since last week, excuse me, this is something, you know, you want to do something here. You want to start bringing in your stops. You want to take off a little from the trade, lighten the load a little bit, likely to get some kickback. Again, you know, the broader picture for gold, in my humble opinion, still is constructive. Okay, this is a big spot, even on the near term, even on the longer term charts. Here's the weekly, right? You have the 52-week moving average and the long-term 200 moving average on a weekly basis governing these lows. So we went over this earlier in the week, guys, and you know, heading into Q1, Q2, mostly Q1, 1208 is going to be the broader bullish invalidation for the entire uptrend in gold, in my opinion. As long as you stay above that, you got to stay constructive. I leave room for that because even if this is just a break of resistance and check it as support, that would be the deepest you'd want this thing to probe. So is that a major significant low? I don't know. All I do know is heading into January, I'm bullish. And if you've been bullish over the last 4 Januaries, you've been doing pretty good in gold. The beginning of the year is typically a very strong time for the yellow metal. So just keep that in mind here as we rebound off 1240. Okay, daily chart also shows the, you know, significance of that pivot in price. Intraday, ready to go. So maybe some divergence if we do get it. You know, it already looks a little tired here. You can see that the oscillator has been making equal highs on these last 2 approaches, even though price action is making higher highs. So yeah, a spill to the downside. Look for support right at the weekly open. Okay, so you're near 1255. But yeah, ultimately, I do want to see this thing pop back above 1267. Big pivot. So we already got the tax debate sort of thing is kind of cleared out of the way. We got it passed in the Senate last night, some sort of glitch, and they have to revote it in the House today. But that's probably going to be on the president's desk before the end of the week, is the word on the street. So as far as that's concerned, you could see that sort of push price back and forth here on gold a little bit. Like I said, you know, if you really think about it, you know, tax cuts won't necessarily be bullish for gold because further excess liquidity in the markets, basically more spending, increase in demand, all that stuff will basically put the pressure on the Fed to actually hike maybe sooner than expected. Now, I don't buy that argument, but I just have to let you know that that argument is being made, right? That maybe a tax cut would be bearish for gold. I don't know if that's necessarily the case. But at the end of the day, price actions at resistance, wouldn't be too surprised to see a pullback off 1267. Ultimately, you want to stay constructive above the weekly open here. We want to see if we can't make that topside break. Any questions on gold? Okay. Let's see if they're seeing any stronger momentum divergence here. Yeah, it looks a little bit tired, but We'll see how the U.S. Open looks like. All right, next up on taps. That was 1, 2, 3, 4. That was 5. Euro dollar number 6. So euro stretching higher. It looks tired here too as well on the euro dollar. Dollar index testing support. Not surprising, right? 1868 into 1882 is kind of where I wanted to see this rally peter out. It's a 618 retracement from the decline off the highs, and the 100% basic 2 equal legs off the low would converge on basic slope resistance right there over basically into the open of US trade right now. So if you do get that stretch, look for a reaction here. Obviously noting that major resistance on this thing is still 119.65. That doesn't change. But at the end of the day, for this near term sort of spill to be refuted, that's the high we would need to clear. It's also Friday's high from last week. So euro could fizzle out here a little bit near term. Here's the daily chart looks like. I guess the weekly chart for euro is pretty impressive here, or I guess add some clarity, right? The 2015 high, 117.14, was basically almost the exact low we made. It was 117.17 last week. So, if we do hold this and push through, remember we still have that uncovered gap in euro dollar from back on the 27th of November, and that's what this level is here. Well, I guess we did tag it once to close last month, but that opens up 119.47 into 119.77. That's the break you'd need to see to get this thing going. So I'd like to pivot back above the 100-day moving average, back above the median line, near term, same type of deal. You just really would need to see a little bit more of a concerted break above 118.82 to clear the way. So shotgun approach heading to the US trade. What are you expecting? Well, if we get a probe into here, look for some near-term exhaustion. Again, if we were to get that, some sort of scenario, you'd look for a quick retracement to see where you want to check your downside targets. But ideally, you hold basically above 117.80. And you look to play alongside. So we will see. Checking channel resistance here in euro. A little bit higher on this stretch. A little bit higher, I hope. 118.68. We'll see what happens there. Any questions on euro before we move off? Okay. Aussie yen, number 7. So, was a surprising move. I was looking for a little bit of a pullback play. Remember, we presented this earlier in the week. The ideal scenario for me was a rebound or a reversal off this into the lower parallel, the weekly opening range low, the high, the 4-hour reversal bar from the December opening range to get long. And that would have been like a sweet, sweet conviction long against a swing low, looking for the topside break. He didn't get it, obviously. We came into resistance. It held for a couple of hours. Here's the breach last night. Objectively, you stay constructive above 86.50 near term. Your top side, you're still looking for 87.32. That's just a 50% retrace, and also a very nice and tidy upper median line parallel. So again, remember how last week we were talking about this trade? We played the reversal to the downside here. And once we got this break, we thought it was sayonara, right? All the way back into support again. The reversal popped through. We always talk about maybe, it's prudent to leave those slopes on because markets will tend to validate or leave or break in the outside of the confines of a pattern, then resume it on a playback inside. And that's exactly what happened. So again, the confluence of the median line, on both of those Fibonacci retracements, 100% extension off the low, boom, boom, boom. So if this was corrective, you'd want to see a hold there. 38.2 retracement off the high. This from the entire decline off the high from September, and the median line, and basic slope resistance. So this break is big, guys. I mean, we have to pay attention to it. And for me, as long as we stay above that point of the breakout, you're looking for the stretch into 87.32. You're looking for the stretch into 87.64. This is a longer dated 50% retracement. I guess I'll show you in the daily chart. The 50% retracement, the entire decline from 2014. There's a 50 line. Resistance, resistance, resistance. The break saw support. Break saw acceleration. That'd be your top side target here. But first is first. Initial targets at the 100-day moving average. That's right around the 87 handle. Okay. Just higher, 87.32, 87.64. Those are your three targets for the upcoming move. Questions on Aussie yen. Okay, again, another, bear with me one sec. Where's that 1618? It's beautiful. So look where the 1618 of the same extension comes out. You see how that 100% was right there and it sat there for a while? The 1618 comes out right at 87.66, same as the 50% retrace right here at 87.64. So really clean, really clean. Sweet. Also looking at this just objectively, here's your monthly open. You set a monthly opening range high. You set a monthly opening range low in the first 2 weeks of trade. You struggle near the highs for a good 2 days before the inevitable break. Shifts the focus higher. Look for a late month high here in Aussie yen. Questions on Aussie yen? Bear with me one sec. I just want to see what this looks like. Okay. This looks interesting right here. I'm just going to delete this for a sec. See the 50 line, break, support, support, support. Not too clean on the median line, although you got that rebound. And this right now comes in basically with that 100-day moving average that you're seeing on the daily chart. Right there. Okay, I'm willing to sit with that for a while. So if we're going to work with that slope, kind of looks like it makes a little more sense to me at this point. That would highlight near-term support right here. This convergence, former slope resistance, the current median line, which we based off of for the open of the week. And that would push these targets a little bit later into the monthly close back towards that slope. Keep that in mind. The reason I like this slope is because the upper parallel is, like I said, dead on with that 100-day moving average. So it kind of makes sense to watch this spot right here into the US Open. But ultimately, you want to stay constructive above 86.50. Bullish inval. The only thing that would put me back on the bearish side would be a break back below former median line resistance, now support. That's down basically at 86.30 or so. Not bad. Some on-the-fly analysis there for you guys. Mark says, can you please check Euro Yen? Sure can. Let me just mark that down. GPY, that's for Mark. I got you. All right. Oh, that's Aussie Yen, number 7. Number 8, let's hit Euro Aus real quick since we're on the Aussie crosses. So continued Aussie strength, right? Here's what Euro Aussie looks like. And it's been a very interesting trade here. So I'm going to tell you flat out right now, I don't know if you're not already in the position, I don't know if there's anything new for you to do here. So the play on Euro Yen was to look for this pivot at 54, 55, 54 handle. This is a big, big zone of support. We talked about it on the daily chart, how critical that level is. We also talked about the fact that that break basically below 54, 55 does put into motion a possible head and shoulders scenario, which gives you a measured move down near 52. So are we going to make the move or not? So is the question, right? Here's the near-term formation that we've been working with, and here's what we look like earlier. Oh, sorry about that. Here's what it looked like earlier. So there's the Aussie yen, by the way. No change to any of these levels, right? We whipped right through that. Watch 87, okay, that 200-day moving average. And then or the 100-day moving average rather, and then 87.32, 87.64 are your next topside targets. But Euro Oz looks very interesting. Here's what it looked like to start the week. So our favorite plays when the weekly opening range takes shape right above a major support, right above a near-term resistance level, those are typically decent plays. When the break happens, you get the actual push. So here you had an opening range for the week, which was just below a key pivot zone in price and just above basic slope support. We came off it on Friday. Really perfect touch before the rebound. So the play was the break of this range. This move here, you know, you wouldn't necessarily want to be in it because, again, the range extends to 54.55, but the break of the weekly opening range, the pullback here, conviction about finding support right at the weekly opening range highs. You see that? So basically, if we settle today above 54.55, I do think you get a little bit more of a correction to the upside. So how you look to attack that from here, if you're not already in the trade, it's going to be tough, guys, to be quite honest with you. You're coming off of downslope support. So if anything, you know, basically a move into 55.20, it might be a fade for a play back into 54. But one other thing at this point, now that we've made that break, quick retracement off the high. Let's see what shows up. Whoop, that's perfect. Weekly opening range highs, break, weekly opening range support. It's the 236, 38.2. All right. All right. Bear with me. I'm going to clean this up real quick here. Okay, near-term resistance. Consideration of slope and Fibonacci 54.94, basically near-term resistance. Bearish invalidation, I think, 55.46. You know, if you break through that, that's the basically median line pop. You'd seen that every time we've broken the median line on either side, it's been a pretty decent run, except for here. So that would put you right on a trajectory towards the upper parallel. And then obviously support for now, you're going to find the weekly open as basically your initial area of support. So that's the play, I think, in Euro Aussie near term. You know, the break of the near term opening range for the week sets you on a week a move to the upside. Ultimately, the burden of proof is on the bulls to really change the course of this move. Again, you know, that possible head and shoulders break, whatever you want to call it, the consolidation break, even if you just took this as a sort of a triangle consolidation, that measured move gives you 52 as a target, guys. It's on the daily chart right down here. So if that is in play, you know, price would need to hold below 55.46. But on the immediate approach with the weekly opening range breaking higher, I do think that the risk for the immediate approach is still for a little bit of a slope higher here in Euro Oz. Ultimately, though, that's a break of the monthly opening range. And we're still in downslope resistance. We're still below downslope resistance. So first things first, look for a reaction up at 54.94. If we get into 55.46, I'd actually be interested in a short exposure or possible pullback lower. Questions on Euro Aussie. It's been an interesting trade. You know, the whole focus for me on this last week, I told you guys I was playing the short into support. I got out obviously way early in the game here as we head into 54.55. Haven't touched it since. I'm not really sure how to attack it from this standpoint. For me, it's either sort of a stretch into here for a possible pullback, or if we get another drop into support, this might be another opportunity to get back for another bounce higher. Interesting play here in Euro Aussie. Okay, that's number 8. Number 9, I'm going to hit Aussie Sterling, and let me jump into your question right here first, since we're on the Euro cross. Mark wants to look at Euro Yen. This damn thing, you know, Mark, this thing has been holding this same zone range for months. You know, Gunshot tells you want to just short it because you're at resistance, but it's tough. It's tough to do that with this kind of momentum pushing behind it. You're an overbought in the 4-hour chart. Here's the last time you broke into overbought. Continued to rally for another day. What? This is a 4-hour chart, so another half day for a couple of hundred pips to the upside before it gave out. I'm not willing to make that move. So, you know what I'm saying? Mark, look, you know, technical analysis 101, you're looking at short here. You're at the top of the monthly opening range. You're at a huge Fibonacci consideration, the 618. We've been following that one for a while. That's from the decline off the highs 2014. And you have a clear-cut target on the top side break would be 36.23. It's the upper parallel convergence with a lateral level that we've been watching. But my problem is, how do you trade it from here, Mark? I can't just jump into a long. Where's my stop? There's no conviction stop. Even, I mean, you'd have to put a conviction stop against the weekly, just the weekly basic range lows is all the way down here. It's 200 pips away. So effectively, having an opinion on it, Mark, I could definitely tell you I'm with you on this one, but effectively being able to trade it in a responsible manner, I'd be looking for a short. An intraday guy for me would be looking for a short off of this resistance. Eventually, I do think you break out, but you know, I thought we were going to break out here. Didn't really happen. I thought we were going to break out here. Didn't really happen. So maybe now, because I'm so hesitant, it will happen, Mark. But you're definitely at resistance. Any way you slice it. Let's check out the weekly chart on Euro Yen, shall we? Here's just a cleaner, basic, objective look at it. So this 618 retracement, this is from the decline off the highs in 2008. Okay, so that's a long ways back. It's also a swing high here from 2015. You know, into Q1, that's basically your target if you do see a topside breach here. And heading into next year for a long-term look, you're basically constructive, above 128.80, this region here. Real clean on the slope lines, actually. Divergence on the weekly, Mark is saying. Absolutely, 100%. You've been getting some divergence on the week. I take that back. I agreed with you a little too quick there. The only thing that would mark divergence on this specific signature, Mark, is if we close the week, you know, at these levels. Remember, you're looking only at the closes with divergence, right, Mark? So we actually, you know, ever since that high, we never actually made a subsequent new high. That was a lower high, and indeed it was a lower high in the oscillator. This is a lower high. Indeed, it is a lower high in the oscillator as well. Now, price action looks right now as we speak like it's making divergence, right, Mark? But this means nothing until we get the weekly close. Okay, if we just plummet from here, this line will just move straight down. It'll look like it was never there. So that's the problem with looking at divergence on the much longer term charts. You need to get the close before you can ascertain any type of you know, momentum opinion with conviction. So we would need to see the weekly close. That being said, you're at resistance. Yeah, absolutely. Let's check it on the daily chart. All right, now here it looks like you're making a little bit more divergent, and these subtle divergences, um, these subtle observations in momentum can be the best sometimes. So look, we're holding 40-60 in the oscillator, which is your classic flat pattern or basic range, and that's where you're seeing reflected in price, right? So on this one, you can see here in price action a higher high, and if we close this high, it would be a third point. From this one reference point down here, momentum has held those equal highs. So remember, all you're looking for in divergence is that the oscillator is not reflecting a new extreme in price. So yeah, if we were to close at these levels for the day, today, this is the daily chart, that would be an additional divergence mark that I think you'd want to pay attention to. Does that make sense? Add to that, we're testing the objective monthly opening range highs, the 618 retracement. This is huge. So you guys know this is a big pivot. Let's check this on the intraday charts. Okay, so some interesting subtleties here. We've been following this slope off the lows. If you take a parallel of that slope, we extended it off the lows here. We saw support, 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 break was resistance, support, support. Really getting messy with it over the last couple of weeks here, but resistance, that again converges right now in the 618, adding further emphasis, further significance to this near-term resistance range. Look, we're there. Price is there. Is the trade there to trade against it? That I don't know. Let's look for some divergence. Let's look for some momentum breakdown. That looks good. So here's like a 10-minute. There's a trigger to watch right there. Hopefully you get like an exhaustion push and a close lower. I don't want to see any closes above 34.30 if possible. And that would be actually a decent play in my opinion, Mark, just for a pullback. Nimble is the name of the game. It is counter trend. So right off the bat, I'd be trading half, a third of what my typical trade size is. Keeping in mind where we are in time as far as the end of the month, end of year flows. So even leveraging even lower on that point. But yeah, you are checking a pretty big resistance. And Mark, we'll know right away. I think if 34.30 gives out on the upside, this thing's just going to rip. It's not going to be a slow meander higher, right? We have a lot lined up there. So indeed, if we do see a pop above that region, if you're long, stay strong. Just let it go. That's what I would say. Makes sense? Does this sound good? Thanks. You're more than welcome. Interesting pair. Thanks for bringing it up. I kind of get bored with these ranges because specifically on the euro and the yen, it's just been played for so long. I feel like the one time you try to actually get involved in the range is when it's going to break out. But all things held constant, we're looking for exhaustion right here. Okay, that's euro yen. There will be number 10 on the session. Did we go over Aussie, guys? Did we do Aussie already? So here's Aussie. This will be number 10. So as I said yesterday, I got out of the long position that I took down here on the pullback here as we were breaking down from 77, 70s where I closed out yesterday. Pulled back, it held support. 74.50 is the top range of that 20 pip area of support, and then you saw another rebound. Am I regretting getting out? Not necessarily, because look, we're still trading within the confines of the initial weekly opening range. So I'm going to go ahead and bring up near-term support, bearish or bullish invalidation. Remember, we had it at 76, which was down here. But to account for the decay in time, excuse me, from here, I'm going to bring it up to right now to basically the lower part of this support range, former resistance, 76.30, converges basically on Friday's low, stretch here right before we closed. Again, that's a huge pivot you can see in price laterally, irrespective of what anyone's opinion is. And you have trendline support. So, a drop into here, look for exhaustion, possible reentry. But ultimately, I do think Aussie heads higher. This is just a big resistance, and there's a reason I bailed on it, because there's a 200-day moving average here. There's slope resistance here. There's former slope support turned resistance here. I think you get a better opportunity to get on the long side once you get a decent pullback. But until you do, I'm kind of on the sidelines here. It was a nice 120 pip rip, 130 pip on some of that position. Great. Let's see what happens from here. Ultimately looking to buy a pullback. So we'll see if we can't get some dollar strength near term. Maybe a bounce off support in the index, right? Give us that little pullback in Aussie. Allow us to get back on the long side. But no change to any of those levels from earlier in the week. We're just trading right in this range. So bring up that bullish inval from 76 to 76.30 again. All right, and don't forget, guys, again, 1,000 feet up, where we are is massively important, massively important. Here's the Aussie reversal, outside, well, it wasn't quite an outside, but it was a weekly reversal right off support. Closed last week below resistance. So the emphasis, the push here does need to clear last week's high on a closed basis to get the breakout play. Otherwise, the risk is for another pullback. Again, ultimately, we would look to buy that. Okay, Aussie picture hasn't changed. Let's see for a break of this weekly opening range. Pound looks like this. This will be number 11. So sterling dollar has been a bit of a trickster lately, but we shouldn't be surprised with sterling doing what it always does. So we opened up the week saying look for a drop into 32.90 or the lower parallel here for a long position. You didn't really quite get it. Once we reversed off here again, I thought that pullback was going to give us a deeper cut into the low to buy. At this point, guys, the way that price action is sort of evolving, I think you're starting to make sort of that near-term corrective term that everyone's noticing. Now, my line in the sand is 34.64 to really validate so I can try to get back on the longs. As it stands right here, from a new, fresh trading perspective, it's kind of tight. If we get a drop into 33.55, we do have that entry on the swing side of trades, guys, targeting 134.60 and change, which is right here. So I do think that is still the play near term to see that stretch near channel resistance, former channel support. Last week's sort of swing high here, midweek on the 14th, FOMC. It's kind of the focus. Again, let me just see what this looks like. Sorry, guys, bear with me one moment. That's pretty clean. Yeah, no change to any of those levels. Still think you look to buy the dips here near term, looking for 34.66. That's going to be the big play. No change to a pound levels. Questions on sterling? Okay. Last but not least, from my list is pound Kiwi. So we talked about pound Aussie, and we briefly touched on pound Kiwi and how that hasn't really made the turn, or that actually made the turn and break lower, but hasn't necessarily seen the acceleration. So it's coming back to check resistance right now. Here's what pound Kiwi looks like on whole. This was the favored play from the pound Oz pound Kiwi play for the week as far as the upside's concerned, just because of where we broke. And where we're testing right now. So the daily chart hasn't been all that convincing. You do have, whoops, didn't mean to do that. You do have basic channel support, which is reflected here in red, here is in blue, which you kind of meandering around. But the thing I want to highlight on the daily chart is this basic swing high. This is the post-Brexit kind of swing high. Nice pivot in price, right? That same level is the 1618 extension off the highs of this near-term chart and the lower parallel, so this was like super clean. So the move here, this drop, is really what prompted a look for a rebound here. Again, some clean range break. Saw the tag again of 90.50 as support. Here's the 50 line break. Still looking for a stretch, essentially into 93.51. There is a Fibonacci retracement. I'm not sure why it's not on there now, but that comes in just ahead of that at 93.05. So like this region. Is what I was looking at for a target on this. 93.51 is a nice swing low from here. And that actually converges on former channel support a little bit tighter on the immediate approach. But I did want to bring your attention to that 93 handle. Might be a player. Might be a player near term. But the idea is still looking for that stretch higher here in pound Kiwi. Again, another way to play some Kiwi weakness that we were looking for without necessarily getting versus the dollar strong is why I like this one. But I'm hoping that we do get that limit into 193. What does this look like? The 1618 comes up there too. Not bad. Nope, too steep. Yeah, if you're not on this one already, I wouldn't start chasing it from here. If you're long, we're going to try to get out as close as we can to 93 if we get the stretch. For re-entry or on a pullback type of play, look at that 50 line. I know it hasn't been the cleanest, guys. It's really light here. I hope you can see it at home, but it actually has been pretty decent resistance, and the break was the origin sort of the accelerated move to the upside. So that's where I want to look for initial support, but 93 is the target on that long side. And here's pound Kiwi from earlier in the week. So we basically came right into that support, and we're looking for that stretch right into the median line. Okay, and that's everything I had on the menu for my side, guys. Let me know if you have any other questions or specific trades you guys want to look at. Feel free to throw on the message board. As far as event risk is concerned, you do get existing home sales at 10 o'clock, not necessarily going to be a major market mover at this point, but oil crude inventories does also come out. Here's what the oil picture looks like just before that. As far as I can tell, I've been trying to break this down in every which way I can. As far as I can tell, this is what I'm working with. Over the last course of, I don't know, last 4 weeks, last 3 weeks, we've basically been in a very large consolidation pattern. The consolidation pattern is happening right at a very interesting area, just below the 1618 extension, 5912. You guys remember, you've all seen this chart before. Here's the daily chart that we've been working with on crude prices. And you can see, that we're trading right into the lower parallel. And that consolidation is happening right under that 618 extension, 1618. This is off the advance from the yearly low. So a pretty critical level or critical consolidation range that we're looking at. So it's got to break. Typically these consolidation patterns will break, 10% ahead of the apex. So you could spend another day, another 2-3 days kind of consolidating within this triangle formation, this wedge pattern, whatever you want to call it. Ultimately, it's the break above 59.20 that looks for continuation into 60. It's a big, big region. And if it does break to the downside, the emphasis is still on a break below that former upper median line parallel. I guess it's cleanest on the weekly charts. Here's what gold looks like, or crude, right? So we were in this consolidation formation, or this, median line formation for years. This is 2015. We started the year at the upper parallel. We ended, or we made a yearly low at the median line exactly, and then we broke above the upper parallel. So technically should stay constructive above that slope. Okay, top side 60, there's 59, 90, and 60. Big, big Fibonacci confluence there, 38.2 retracement and the 618 off the lows. And then beyond that, obviously, you've got tons of room. But if the consolidation break happens to the downside, you'd basically be risking a drop near 54. And that's where you look for, again, some more meaningful support in crude. Any questions on crude prices? Inventory comes out, what is that, 10:30 here in New York later today. All right. Well, if there are no other questions, we'll go ahead and wrap it up there. Stay tuned. In just a few hours, we'll have Jamie coming up with the midweek strategy webinar to walk you through some of the longer-term swing setups that we've been following. And I will see you guys tomorrow for the final webinar of the year. Till then, best of luck trading, guys. Keep it light, okay? Don't get too heavy on any trades just yet, and we'll pick things up tomorrow morning. Cheers.